Good morning, ladies and gentlemen. Happy Wednesday to you all. Today we're going to be going over MICRON Technology's earnings that they just posted Tuesday, March 28th, the result from those earnings, and how the share price has been trading going into earnings, along with where we see it going in the future. So without further ado, let's dive into the video. So MICRON, on reporting of earnings, reported a $2.03 loss per share, with the estimated being 72 cents loss per share. So a massive doubling of the loss that was expected from the company. It already was going with a bearish skew into earnings, guys, and we're going to take a look at that, how the charts were affected by that, along with the market consensus being 78 cents loss per share. Now, I don't put much stock in EPS. However, you still gotta not make the number look that crappy. So that's really bearish starting off. Next, we're going to look at revenue. Reported revenue of 3.69 billion with the estimated revenue of 3.74 billion. Now, I would say that's not necessarily a huge revenue miss, so 1.3%. However, if you're not returning a profit to your investors, it doesn't necessarily incentivize me to have more bad news on the already bad news that I've had. So with all that combined, let's take a look at MICRON Technologies to see what it was doing at post-market. So as a close of the market, when the earnings report came out, you basically had a massive wicking candle on up to the downside, reaching all the way down to the lows of the day, piercing up to the previous day's highs, and kind of settling out where you kind of opened. So basically wiping out all the losses of the day, but not really advancing the stock in a positive or negative direction either way. However, this is just the intraday trading. We really don't look at that because it's on low volume. Let's look at the bigger picture along with the daily graph. So first thing that stands out to me, you're below the 200 weekly moving average, which makes sense because you just reported a horrible earnings report. You're negative for investors. You're losing them money. It's not something that I would expect to be above the 200 weekly moving average because you're just bearish overall. If we zoom out here, we've been consolidating in this region of $49 all the way up to $64 for an extended period of time since June. So, the market has been going up and down, but MICRON Technologies has basically been going sideways. You did have a W that formed on the chart here, but it was a failed breakdown. And honestly, you could be forming another W here, but with the most recent earnings report, I don't suspect necessarily that you push up past that 200 weekly moving average. However, I can be wrong, but if I look at it from a combine the earnings plus how the chart's been trading, I do suspect you're going to come up, bash your head against that 200 weekly, and then reject back off of it, coming back maybe to the 50 daily or 50 weekly, depending on how the stock trades. But if we, like I always say, look at the bigger time frames to kind of give you an indication of what's going on. So if we jump over to the weekly, it shows a very clear, almost bear pennant pattern or a bear flag, where you have the flagpole here. I'll make this white for you guys so you all can see. And basically you have your consolidation pennant, as I would say right here, where once you start breaking these lows, you got a long way to go to the bottom. Price target possibly, if you break this pennant, would be down into the $8 and $12 region, which would take us back to the 2016 lows, which if you got back down there, that'd be a very incentive buy, because this is a semiconductor company. All these companies are tied to the hip with governments and how they're all interconnected. They always have a business. Now, I'm not saying go blindly invest in them. However, I would find it an interesting opportunity if it ever came back down to that $10 point, wiping out almost 5 years of growth. So, or at the very least, if it came back down to this $28, $32 price point. And just for the laughs, let's take a look and see if it has any big A to B patterns on the chart, basically coming from swing low to swing high. That completes around the $37 and $73 point, which I could see actually coming back down, retesting the COVID lows, even this support zone here that it formed, or even $32.23 if we're breaking this bearish pennant pattern. So definitely something to keep an eye on. I'm going to leave this lower consolidation trend line here just so I can understand where we may be finding a possible floor. And really, if you start breaking this support line here, I would be very bearish skewed on the company. Combined with the earnings that you just had, I would not be surprised if this is a smaller in that larger A to B pattern of A to B, B to C, completing down at the $50 point back into this consolidation region here before filling this gap. And you know my opinion about gaps, they all get filled in time. Not necessarily always, but in time. You kind of came down to this gap fill before, didn't actually start it, bounced off it, headed higher. So I really would like to see price come down into this $49 region before I would get bullish on the company, along with combined with the earnings. Now, why do I always say this is a dumpster fire when you're below the 200 weekly moving average? Well, for standards it's very hard to expand upwards when you have a very large resistance above there. Once you get above $62.07, combined with the bad earnings, the stock is at that point proving to me that there's people other than myself viewing value there, and therefore I'm not the start of that trade. I'm possibly the one following it, not necessarily saying performance chasing, but it's just a very easy expansion at that point. Once you get above that, taking out these 64.36 highs, I'd definitely be looking to possibly expand up into this region of $70 all the way up to $75 possibly, and then creating more price structure as you go up. You also could have possibly an inverted head and shoulders forming here. However, if you break the trend line here, which would also be your swing point here of the right shoulder, you would invalidate that pattern and probably heading lower. So overall right now, it is a very wait and see. I would not try to buy this company as it sits right now, especially with the earnings that I just had. It could be an interesting bearish opportunity just because of how earnings were reported. But on the flip side of being bearish, you're in an area of a lot of consolidation and support. You're be in the kangaroo, as I call it, when you're all over between the moving averages. And really, once you break this 200 daily is really when it becomes very easy to get short, because there's not a lot of price action to support you from the $56 point all the way down to $53.59 for a short swing scalp on the daily. And then the true opportunity is going to be this gap fill down here that starts at the $52.85 range all the way down to about $50.37. So definitely going to be keeping an eye on that. And for those that stayed towards the end of the video, we're going to go over to Lux Algo just to give you a more advanced look at what the chart is telling us. So we do have a buy signal here recently off this gap up here, which, you know, gap ups and holes usually for buying. However, with the MACD kind of curling towards one another, but still being diverged, I could see you get a possible bear squeeze up into this region of about, I'm going to say $62.40. The region starts at the $61.96. So definitely an area I'd be looking for a rejection off of. If you get back above there, if you get to these swing tops here of 61.25, then maybe I'd be looking to possibly get a short position there, depending on how the stock is moving. But you have RSI in the overbought territory for the company. So you did have this run up into earnings where now earnings maybe have disappointed, but again, it was setting up to be a bearish earnings, but it was, in my opinion, more bearish than investors perceived. However, the stock hasn't completely tanked on that bad news. So I'm sitting here questioning, based on the technicals, of how far this is apart, where you are in the RSI. Does it have a little more juice to kind of squeeze some shorts and get up into this region of $62 all the way up to $64 for a possible reversal? And time will have to tell. The daily for me, I want to see, before I go short on the company, this MACD getting closer to one another. It still has a lot more room to run to the bullish side, not necessarily to the downside. And I want to see this RSI kind of top out, maybe form a double top around the 75 point, but I really want to see maybe even a slight divergence in it that maybe tops out at 73. That's when I really would like to get into the company for a short position, or maybe just look for a pullback at that point. Again, I would like to see it come back down to this $53.74 level to tackle this price zone, or even, like we said before, this $49 region, which the reversal zone is sitting on, along with a price action zone. So anywhere from that $50 all the way to $48.51 would definitely be an interesting buying opportunity. If we jump over to the weekly, like you saw, we are in that pennant with the MACD not really moving upwards or downwards. However, the thing that concerns me is the RSI sitting very, very much near the overbought territory on the weekly, with the MACD kind of just doing nothing. So you could be forming basically a setup to go lower, tackling these lows down here, possibly even coming down to this $43, $44 region, or even coming back to retesting this reversal zone of the COVID lows. So once you start breaking these supports, basically breaking 48, 44, which is the swing lows previous point, next stop, at least for me, would be the $44 region, and if not, lower price depreciation after that. And if we just jump over to the monthly, your monthly, you see on the MACD here, you are separated bullish. However, RSI has not gone over the 50 territory yet, and with that, I could see you possibly curling back up, going back down on the MACD, and RSI heading lower to oversold, which will give me a true bottom there versus where we are now. And like I said, back in this $33-47 region would be the ultimate buying point for Micron, but this is a monthly view. It takes very long to play out. We are on Friday going to get the monthly close, and let's say hypothetically we close like we are now. You have an inside bar with a failed breakdown on the monthly candle, so it could signify more bearishness, but you failed to possibly break down, so it could also signify more bullishness. Really, once you break this range, like we were talking about for the bulls, once you start breaking above that $64 region, which is your 200 weekly moving average, remember going back to the $62-64 region, I'd definitely be looking for an easier expansion upwards because it's breaking out of this range. Same with the downside, if you could take those intraday scalps. But for me, long-term short opportunity is once you get down to the 48s and 50s to be looking more short-sighted on the company, because then you got a lot more easy price structure to head lower versus up. So with that, guys, we're going to conclude today's video. I hope you enjoyed it. Like, comment down below. Tell us what you liked about it. Tell us what you didn't like, any ticker requests, and what you would like to see in the future from the channel. So thank you all for watching. Hope you have a wonderful day.